Hey, and welcome back. Welcome back to another true scalping live stream with the Mohawk Forex team. And we're back after our bank holiday yesterday and the funeral. God bless the Queen. We're back trading and what's going to be a very, very, very busy week. Coffee's on the go. So today, what we're looking at first off, well, we're on US-30 at the moment on the 5-minute time frame, as we're getting ready for the housing starts and building permits news in about 10 minutes time. And this one is obviously inflation data related, hence why it's a good one to scalp. Sometimes these ones don't really do much, but at the moment, like I say, data is everything in terms of people looking for inflation and how it's going to affect interest rates and everything. I mean, this week is a big week for all the major banks banging up interest rates. Some say it's going to be 1% tomorrow for the Fed, could be 0.75 for the UK on Thursday, who knows, and then higher. So obviously the amount of building permits issued and the amount of housing starts done is a reflection, obviously, that they're expected to be coming down, which is what the markets need. They want to slow the economy down, and this is a good indication of it. So if this is lower, we could see buys on certain things, maybe US-30, maybe gold, maybe pound dollar. So that could be interesting to see. And like I say, we'll use our chart and we'll use our momentum and our buy sell signals just to give us the edge and see which direction this news is going to go in, and then we'll add our new 1 minute time frame onto here to help identify false breakouts on the buy and sell signals and false moves, and where the bottoms are. We're looking for tops and bottoms all the time. If you miss trading with a trend, like there's some nice signals here, look, pull back, nice signal, went into a range here, so you ignored that, and then there was a nice sell down to the bottom of the fib. So this is all pretty standard stuff. The NY Open is there, but like I say, we've got this news coming up in about 8 minutes time or so. We'll have a quick look at cable as well, NAS, US-30, and US-30 on the 1 minute chart is also, say, at the bottom, waiting to come back into our bands. So again, showing where we are. We could go lower, obviously, but we're looking for a reversal on US-30, so we can add those both on the same chart. So we've got 1 minute and 5 minutes together. There we go. So we can just see, you know, if we're going to go lower on the fib, it's pushing down lower now, as you can see, and there's no reversal till we're back inside our bands. And but again, that's no reflection of the news. News could take this lower, so I'm going to stick on the main big time frame for the news event, and then we'll go back to the 1 minute for the open and for general scalping. And again, you want to be on standard candles for news events and opens, and then you can switch to Hakanashi, which I have done on certain things for general scalping. I mean, the signals are more reliable though. As you can see, look, nice buys, not sell, the sell, buy, they're all winners. And you would use the 1 minute to confirm if these are false or not. So but for, like I say, news events and opens, you want to be on normal candles on the 5 minute time frame. So we're plugged into Bloomberg as well, who are also waiting for this news.
Trade side, which is essentially our importing a massive energy bill that is a one-off.
So we'll keep an eye on that.
So break evens in the Eurozone.
And remember, you go to the website www.mohawkforex.com for information on how to join our VIP trading group,
particularly again if we look at break evens,
where I can teach you the art.
And the central banks can't raise rates fast.
It's practice. It's practice. It's not over trading in terms of picking too many things. I only trade really US-30, NAS, DAX, pound dollar. They're the majority. In fact, that's pretty much 95%. You know, it takes a lot for me to go outside those. So 4 or 5 things. We've got a couple of strategies that we use. and this is just one of them. It's been fairly successful over the last few weeks or so. So 5 minutes is our basis, then you can use the 1 minute to just confirm whether it is a genuine pullback or whether we're just going to get in, get green and get out of the trade. So at the moment we're at the bottom of the fib, looking to push up. We've got supply and demand zones here, look as well, at the 382 and 5, the golden zone, as always.
I think what you're starting to see is ECB's gotten ahead of it a little faster.
Just reply to some questions.
And again, with the Riksbank, with inflation expectations, they're just not where they should be.
We'll hear from Governor Bailey this Thursday with the Bank of England. Mark, thank you, buddy. Always good to catch up. Mark McCormick there of TD Securities, starting to think about what to do with EM and maybe fade some of that dollar strength selectively. We're starting to think about a steeper yield curve this morning. Yields higher.
And we're going to make sure we're logged in.
10-year by 7 basis points.
Logged in.
On a 30-year by 6 or 7 basis points. As well, Lisa got a bit of a breakout on our hands this morning.
Yeah, it's the highest levels that we've seen going back to 2014.
Logged in on US-30 on the broker IC markets, and this week I've only started again back to a small account again. I started with about £700 this morning, which is about $850 or so. We're already at 827, so we've already bagged this morning $130, so we're more than 10% up on the account. So normally, again, that would be it. I wouldn't want to push more than 10%, but obviously we're live, we're doing this for entertainment purposes only, not for financial advice, and our results are not typical. So you know, this is just for entertainment. Otherwise usually I would have closed my computers down by now. Whatever I trade, once you get 5 to 10% per day on your account balance, that's more than enough. Most people never get that. You know, it takes them a week or a month. But we're 130, so we're 20. Basically, we're about 20% up on the account because we started at bang on £700, just looking, and we're 827, just under about 698. So yeah. And again, just using the smallest lot sizes, which is one standard on IC markets, which is about 0.1 on most other brokers. So it's the smallest lot size you can use. It's a small margin. But you've got to have a margin of 134 to be able to trade it. So yeah, I could probably get 2 or 3 positions away and probably have one backup position to get me out of a hole if I go the wrong direction, which I try not to do. And that's 10 cents a pip is what we're handling. So 100 pips, obviously, you know, $10. That's what we're trying to play with per trade. And that's a good way of rounding up and doing, you know, 10-20 trades, getting you $100-200 for the day, close your laptop down, you're done, come back tomorrow, same time, same place. That's the way to do it. But I thought this would be a good one today, just see if we can bag something on this, on the news. So we're about 2 minutes away, so good luck everybody if you're going to trade this. And like I say, we know it's before the open, so there will be manipulation on the result, but as far as I'm concerned, a lower figure, which will be worse than expected on this, remember, will be better for the market, so we should get a buy. Should, he says. Remember, or just because these say better than worse expected, that doesn't mean it's better for the market. That means it's just a figure for the figures. You know, a higher number, a lower number, better than worse. You know, the lower these figures are, then that means the economy is coming down, so inflation might be coming down. You know, it's all that kind of. So don't just jump straight in. Make sure you watch for price action.
What do you think of when you think of a battery? For most, it's what we use to power devices for both work and play, and maybe even your car.
Move that across so we can have a look. We've got 20-30 seconds, so good luck everybody. Make sure you're set up right.
But all of this is just a prologue to what the next.
So we're dropping lower.
As we drive to an increasingly renewable power driven grid,
I just want to look for 100 pips, 10 pips, 100 points in trading view, which is like 10 pips.
that are driving.
5 seconds. Good luck, everybody. Get your fingers ready. Let's see.
It's a multi-trillion-dollar opportunity, and it's imperative that we figure out the solution here.
How we store energy on a massive scale is in many ways the central
Go green.
challenge of the fight to stop climate change.
Let's just refresh. There we go. We've got a mixed bag. Housing starts were higher and building permits were lower. So let's see what the move's going to be. It looks like it's going to push up on that news.
To improve your firm's productivity and profitability, Bloomberg Law combines the latest in AI-powered tools and in-depth analysis to accelerate the research process.
Brill. We've got in and out there. I just managed to bag some pips on that. On the buy. Surprised I managed to get 5 positions away and no margin calls. So that was great. So we got so we got 5, 10, 15, 20. We've got $35 on that. Another $35 bagged. I'll just print that result. We might be able to go again yet on this result. A nice little push up.
Some economic data just seconds away on the housing sector, that industry here in America. Mike McKee's going to break that down for you. Going into it, futures down 0.8% on the S&P, another leg lower.
We're looking for that reversal anyway.
1% also with your data is Mike McKee.
Let's have a look at the 1 minute.
Unexpected, John. Housing starts in the month of August rose by 12.2% after falling 9.6% the month prior. So it looks like builders maybe trying to get some more stuff in the ground before the housing market completely dries up. Building permits reflect the idea that it is going to, because they're down 10% after a 0.6 decline the month before. So a big drop in what builders think is going to happen or are planning to make happen, compared with a big rise in what they're making happen.
So again, we're not going back in. As you can see on the 1 minute, we're pulling away again. We need the candles to be back inside our bands to take another buy. So we'll just hold.
At a 5.4% drop below July. So the number of houses that are being finished is also falling. So in all, it is a picture of an industry that is slowing significantly, and no doubt because the Fed has raised interest rates and mortgage rates are now above 6%.
And yields are going higher again on a 10-year by 6 or 7 basis points. No big change off the back of this data. Your 10-year 356, your 2-year 3.
Just a small move, as they're saying. It's a rejection. We want to be inside our red band.
0.8%. Mike, the Fed and Chairman Powell talked about the totality of the data. We've got all the data now. What does it mean for tomorrow?
It means 75. They're focused on inflation, so it was the CPI report that is going to be most influential for them. We have seen in some of the other data,
they're building more houses, but the actual building permits is lower. So we should see another push up, I think, on this. There we go.
People put out a report today that said rent prices have started to slow their increases. So in the long run, that will help. But for right now, where they are with the core CPI and core PCE, they're going to move 75 and give the same message to the markets that Jay Powell did in Jackson Hole. We continue.
Mike, as you prepare your question that will inevitably come at the end of the news conference tomorrow after
let's see if he's going to push up.
And you really grill him, how much are you focused on the balance sheet and what they do with the...
Who's like to do just 2 blocks of trades? We've got 5 away already.
That's an interesting question, and it's being talked about more and more in the markets, Lisa, but the feeling is the Fed's not going to address it at this meeting.
Again, it's a 5% return.
They want people to focus on the idea that they're going to keep going on rates. They also have the SEP, the new projections and the dot plot. So a lot going on there, but there is a feeling that maybe they're not going to be able to shrink the balance sheet as far and as much as they thought.
Well, I just nipped in there. It did just before it crossed the band. I might go again in a minute, but we just got another like $10 there. So that's 2 blocks of trades on that news, and we'll just watch price action now.
You in DC tomorrow, Mike?
Absolutely.
In the news conference, looking forward to it. Bob Michael's joining me later. Bob Michael, every time he joins us, he likes to give Mike McKee.
That was nice and easy.
To ask Chairman Powell. So look out for that a little bit later, Mike. Joining us now. about the economic data and how much this Fed needs to do to get growth below potential and ultimately get inflation lower. Is 4% it?
No, and actually, John, you asked me this a month and a half ago, I think.
We'll wait for the bigger pullback now.
I thought that the Fed would never get to 4%, but I've changed that view. They certainly will, and probably by the
Say, because we might get up to that 236 level on the Fibonacci.
Beginning of next year, but then I think they'll pause. I also think they'll slow down their rate hikes the further they get away from the neutral rate, which, you know, we don't know exactly where it is.
28 seconds left on this candle.
Close to it now. So, as Mike said, I expect a 75 basis point hike later this week. I expect another 75 basis point hike later this year. That'll bring us to 4 by the end of the year, and then we may have an extra hike.
And from there to the 236, it's 400 points. Let's see if this finishes above 7 seconds, 6.
Is the transmission mechanism of higher yields effective this time around? And we talk about the lag time of how long it takes before this actually starts to slow inflation. From your vantage point, is it too slow? Are they going too far?
Still red, remember.
At least now?
We've got a red moving average cloud, red trend.
Lisa, and it's not just a question in terms of what the
Let's
Fed's
see if this will
doing,
push
but if we
back.
take a more global perspective, most major central banks are tightening pretty significantly. I mean, the Riksbank is a good example today. The Bank of England will be tightening pretty aggressively, I think, later this week. And so there is a question about when you have this kind of coordinated tightening, what the knock-on effects are. Whether
Yay, we steamed in there. We've got another 5 positions. That was in and out. And again, we've got another 2. We've got another 3. 6, we've got another $15 there, $20. So this is good. It's only a small account, remember. So we're just getting green, getting out.
We've had a lot of aggressive rate hikes. They'll kick in with a lag, and that's a lot for an economy to digest. And so we may see trouble, not just because we've had rate hikes in the U.S., but because pretty much everywhere but China is hiking rates now.
A lot of companies, though, have taken this time to push out their maturities so that they don't have to borrow in the near term.
So now we're $190 up for the day. You can see that pushback now, you see. You've got to expect this when we're in a down. You can have a look on the 5-minute time frame. It's still a big downtrend. We've got no... If our trend bar was green, our RSI was in the neutral zone, etc., then I was more convinced of a pullback to that centre line, but it's not going to happen at the moment. It could do, but yeah, we've got to wait for the open, so we can just watch this. That's the buildings news.
Over the course of the pandemic, both amongst households in aggregate and also among corporates. I mean, loan defaults are at record lows, and so
post that into the group so everyone can see.
We see a real pinch to kick in for consumers and companies on the basis of higher rates. That being said, you know, when consumers finally retrench, is a question more of psychology than it is economics, and we don't actually have a great answer. You know, is it enough for them to know that a recession is coming to retrench, or do they actually have to experience the recession? We don't have a great
That was good because that was 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 15 trades. So it was good.
It means that the Fed can hike aggressively before pitching us into a recession. So I don't actually expect a recession in the U.S. Before the middle of next year, which I think is a bit later than some other economists are calling.
How does that stack up versus Europe, Megan? You've just been there. How bad is it?
Yeah, Europe looks a lot worse. I think Europe will be in contraction by the end of this year. The second quarter outperformed relative to expectations. You know, I think the third quarter can be buoyed by a banner tourism year in the peripheral countries, the southern European countries. But the last quarter of this year, I think it's going to be pretty ugly, in part because of high energy costs. And I think Europe will be in recession.
Yeah, as I'm just posting there, just a small correction in a bear run, but well done if you managed to get some trades on that. So well happy with that result. And as you can see,
so I actually think China, the slowdown in China is probably a bigger deal for U.S. companies than Europe. It's probably a bigger deal not just because part of the slowdown is driven by a zero COVID policy that I think President
so it was worse than expected on the building permits, which you say is a show that the interest rates, high interest rates, are working. Housing starts, obviously, like they just said, probably building companies hurrying up to try and build as many properties as they can before the market falls apart, as they're predicting, but nobody really knows, of course.
coming out of China after the Party Congress. But a lot of that stimulus will be pushing on a string. I mean, you can only do so much to push out credit when no one wants to borrow, and I think confidence will be low.
So that's why we took the buy. It was really more based on the building permits being worse than expected.
So I think it's the China
and now obviously, look, we see it's pushed back up again. We could have gone again.
Will impact on U.S. companies pretty significantly.
Megan, thank you for that. We appreciate it. Megan Green there of the Kroll Institute. Megan not alone on that front. I think it was Nomura that came out several months ago and said 2 handle on Chinese GDP this year. Consensus on ECFC on the Bloomberg terminal 3.5 for 22. Just to pick up on what Megan was saying. And Lisa, 5.2 for 23, 5% for 24. I can't get to the end.
So you should have entered on that candle there, or we should have entered. We entered on that candle.
A lot of people going into their low threes on China
there.
this year.
The red one here, that was the buildings news.
Bill Lee over at Milken of whether that is inflated, whether people don't go below 3% because they don't want to.
That's where we entered. That was the news, pushed up, retested, and now it's broke. It's heading to that center line.
Zero COVID, and I point to what happened in Hong Kong, where they're actually trying to reduce some of the quarantining rules to open up more to the world, and mainland China is okay with that. You know, I wonder if that's something like a petri dish, them trying to figure out what it would look like to remove some of these restrictions and open up a little bit more at a time when there's a lot of social angst and uprising about what they've been doing.
How much of a change will that be?
You're looking at the 5 minute, you can see you've got clear to 236.
It's a pretty big change. I've had a friend go over to Hong Kong, and it's a
On
pretty
the fib.
significant thing to have to stay in a hotel and not leave the hotel.
RSI is still red though, and we're still, ideally the RSI should be in that neutral zone. That's where you want to see it for us to be convinced of a true pullback. And our trend buy is still red as well, so we're still probably heading further down. But we've got some minor corrections, and like I say, there was a couple of trades you could have had. Could have got green on this one, in and out again, pull back.
To the commodity market. The crude, Ellen Wold was talking about that. Amin Nasser at Saudi Aramco talking about these.
There was no trade there. There was a sell there. There was. So there's a sell and a buy, a couple of buys. But like I say, because it's pre-market, we only usually trade US-30 on news events before the market opens and then on the open, and then that's it. I don't trade US-30 really in London session. Every now and then when it's synced really well with DAX, but I trade DAX, you know, for the opens in London, US-30 for the US session, and that avoids a lot of false moves, breakouts, etc. Going in the wrong direction. Trading the right thing at the right time is always one of the most key things, especially when we're micro scalping as we are now.
Futures down 6 or 7 tenths of 1%. Isn't that a favourite line of his? They'll adapt and adjust. From New York, adapting and adjusting. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. The president of Turkey says Russia should return occupied territory to Ukraine as part of a peace treaty. Recep Tayyip Erdogan told PBS that he had a very extensive discussion with Russia's Vladimir Putin last week. Erdogan says Putin has showed him that he's willing to end the war as soon as possible.
Let's have a look at our pound-dollar trade for later on cable, as it was successful 10-pip winner today. So at the moment price is around our end. This is our New York line that we call it, and obviously that we enter this trade half an hour after the open, depending on where price action is. So it looks good for a reversal back to the line, and again we can measure it, and usually we want, obviously we want 10 pips ideally, so it's not quite there yet, 7. We want price to be lower, dollar to be stronger. So we'll keep an eye on that. We'll just save that chart. DAX, like I say, is out of the equation now for the day. That's back tomorrow. And NAS is looking interesting as well. Yeah, NAS, there was some nice pullbacks on the drop. There was basically 1 there and 2. So there was 2 trades we could have taken on NAS.
Shipments included the relatively cheap Swatch
what we've got in on here.
Global news.
It's about planet Earth.
What's on the next page?
Can't we live in a way that doesn't overburden the environment? We need a better story.
Just on that one as well, so maybe. But again, we're in a bear market. You've got to see it's pushing down. We're bottom of our fib though. We've got a demand zone here, and RSI is getting back to that neutral zone. So this could cross over, and we could be scalping to the top of our band. We'll wait and see. 37 seconds. This looks like a good push. We've got a buy signal as well. Let's see if we can get in on this action. Nice rejection. Now pushing back.
Apple's delaying its next major iPad software update, iPadOS 16, by about a month from September to October. Apple made the decision for a number of reasons, including a still buggy Stage Manager multitasking interface and in order to link the launch closer to the more similar macOS Ventura. Still, it's an unusual move. Since shifting the launches to the fall in 2011, Apple has released
some nice movement. You can see it on the 1 minute.
Simultaneously each year around September.
Let's see if it crosses over that center line.
You may find some issues around compatibility with cross-device features like retracting and editing messages in iMessage, the new shared iCloud photo library, and the new feature for transferring FaceTime calls.
Waiting for that buy signal to pop back again. There it is on the 5 minute time frame. You can see. If that sticks, then we'll be in. Let's get ready.
Across iPadOS 16 and iOS 16. Regardless, it was still, of course, the right move. Stage Manager on iPadOS 16 is still quite buggy. I don't find it particularly intuitive, and it's not compatible with most iPads and many third-party apps on the App Store. The feature clearly needs some more polish.
So the better buy was definitely here. That was a good entry. Right at the bottom of the fib, the push back. We might still have some room here to scalp.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody.
Coming from a demand zone here, look at the bottom as you can see.
ESA wants to be a leading force.
A buy signal again. Is it going to stick this time? It's trying its best. RSI needs to get back in that neutral zone. It's 43.
We are going to have to learn to live and work off-world in a different way. And the place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
$186. Still messing around on the center line. Zoom in and watch. Fingers ready. It's got to break above that center line.
I think the Fed wants to see unemployment rise. They won't say that out loud, but I think they want to see.
Keeps rejecting off it. It's trying to break.
Not as tight as the way that they'll put it, and they want to
trying again.
Slow down. The question is whether whether risk assets can tolerate that sort of pain.
Some of the big questions, Kathy Jones, chief fixed income strategist at Charles Schwab, as we look at
15 seconds left on this candle.
that we've seen going back to 2007. really bumping up against that 4% level. We're looking right now at a further deterioration in equity futures ahead of the open with about 40 minutes to go. Really, the NASDAQ seeing more significant losses, the S&P down 0.7%. People looking at some of those tech-sensitive stocks is really driving some of the losses there. Euro once again below parity, 99.64, and that 10-year yield reaching the highest level going back to 2011. Have we reached peak yields? The housing market very much in the forefront as we watch yields rise because mortgage rates have been climbing so significantly, and there's no one better to speak to this than Jonathan Miller, who has decades studying the industry, president and CEO of Miller Samuel. He always puts out these fantastic reports that gives these real deep
It's ranging along at the moment.
On the ground. And we're talking about the
Waiting for that break above that 1160.
Yesterday, we're talking about what it means to have a mortgage rate at 6%.
There we go. Come on. Rejection. Come on, it's going to go again.
The demand, the strength in this housing market.
Well, absolutely. Before the Fed was raising rates, bidding wars in most of the markets we cover across the country were somewhere in the neighborhood of 50% of all transactions. Southern California was 2/3 of transactions. There's still bidding wars now, so it's just much more muted. I think the narrative is that, you know, you can hear crickets, and that is not the case. It's just not what it was, and what it wasn't sustainable.
But how much are we speaking about idiosyncrasies?
Doing its best to try and push up now.
The market in Connecticut, for example, very different than the market in Phoenix, Arizona, or the market in San Francisco. How much are we seeing potholes where you are seeing wholesale declines in prices?
It's going to sit on our center line.
The Sunbelt darlings, whereas other areas are holding in more significantly.
Just no momentum at the moment. The buy signal's back in again though. We've got green on the trend bar, so that's good.
Sellers cutting asking prices more than wholesale price declines throughout a region. You know, in aggregate in these regions, because inventory is so low, even with the increases that we've seen, there's a fairly firm underpinning underpriced. It's certainly, you know, I'm not saying we're not looking at some
RSI is back in that neutral zone.
A couple quarters out, or, you know, sometime in 2023, but I don't see this as a correction scenario because the market was wildly overweighted on the demand side going into this, and inventory was literally obliterated. You know, a typical market, sub-market might have 200 listings. Just before the Fed
Buy signal sticking by the looks of it now. RSI 45 again.
12 listings. Now there's 50. It's still 75% below. I mean, that's sort of the scenario we're seeing in the different markets that we cover.
But just to push back, we're seeing the volume of sales drop off a cliff. And a lot of times that's a precursor to price drops that are more substantial, right? It really is a matter of where people are willing to transact, especially if their all-in borrowing costs are rising by hundreds of dollars a month. I mean, at what point does that housing, the sales slowdown translate into something materially in price?
Yeah, so typically there's an average of about a 15-month lag between sales correction and some kind of price decline. I think what many people get wrong in a market pivot like this is
there's the buy signal again, pushing up nicely.
Sales activity falls, then inventory rises, and then because there's more supply, prices correct. But housing prices are sticky on the downside.
Brilliant. We're in and out there. We managed to get 5 positions on that move. Again, just small amounts, but we got green. We got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 7 positions away. So that was nice on NAS. Again, it's pushing up. I want to wait for that. Once we cross above, I'm looking to go the reverse because we're getting towards that 236. We could have held a little bit longer, but I took my green and got out. As soon as it's approaching 236 on the 5, I want out. Remember, we are pre-open.
Right. I think you know, housing is about 30% of CPI.
That's good. That's took us over $200 for the day.
It's not, you know, any kind of correction in
let's say day, I mean 30 minutes this morning scalping on what we've been on now, 45 minutes, that's it.
Owner's equivalent rent. And effectively what's been happening is you have a slowdown in the sales.
A buy signal, you see how you put the line across it, and where the buy signal is, there's your confirmation. That's why we took the trade. Where the double confirmation, where green trend bar, where the buy signal, RSI in the neutral zone, and we had our 1 minute candlestick finish and sit above our centre band. So that was good to go. Once the momentum gets above a certain level there, we want this to be looking for the pullback.
Is going to be longer than we think in terms of pressing rates higher.
How high could mortgage rates go in your view?
So let's see. We'll wait on NAS now. Literally, we've got 5 minutes till that 230 area. Price is set on our cable line on New York line at the moment, so we're not doing anything with that. And US-30, there we go, smashed our TP. So that was good. On the building permits news. Centre line got up there eventually, it did, that's pretty good.
I'm not sure if that's going to be effective just because of the owner's equivalent rent calculation, driving rents or keeping rents high.
I'm surprised that's pulled back. I would have thought it might have gone on, but again, remember we're in a real down. If you're looking on the bigger time, as a 5 minute time frame, we're still, you know, these are just small corrections.
20 seconds. Have we overdone the back to cities trend, or is that going to continue?
I think it stays where it is. It's pretty close to that.
I say we're still red on the trend bar. RSI has rejected its average line, so we're still bearish. You know, we just managed to scalp the news. That's why you've got to be careful. You just get in, get out, 2 blocks of trade usually, and that's it. And then wait for the market to resettle, and as it is dropping again, as we can see. So let's have a look back on NAS. Yes, rejected. So that was good for me to take profit where I did, because it didn't get any higher. Got a couple of pips higher. Now it's trying to pull back, but again we're in a range now before the open. Still got the green buy signal. Pushing back up again. We could have got back in at the bottom of this candle. We rejected. Let's see if this pushes back.
Comes to New York City for the United Nations General Assembly. From New York, this is Bloomberg.
This could be a nice entry here. I'm just, when it's around the center band, I'm unsure. I never like it. I like really continuations when we're outside the bands, and I say we're in a downtrend, as you can see. So you know, if you draw a trend line, you can see where you want the break to be ideally before you take a solid buy. So, you know, we know we're just going to get, you know, touch that line, it could pull back, it could go all the way to here. Look, so this is where, when you break this trend line here, this is where there's some scalping to be done, more buys. And by that point, we should be already approaching that 236 line, which we are, look. And then to the golden zone at 272, and there's more buy, there's a supply and demand zone. Demand zone there waiting as well for more buyers to push up, but I just heard on the news it's still bearish. So, but we'll leave that trend line on there just to see a reference if price does actually break.
Was relentless and
we can see, you know,
to succeed
go.
and not let rock bottom define him as an individual.
Just make it more accurate on the 5 minute, but that's the top's where it should be.
Take them apart and make them better and put them
Probably
back
there,
together.
look.
I respect
The wicks
craft,
where it
so I don't
rejects
wanna
off it.
minimize and disrespect the value of each step of the craft and do by machine what should be done by hand.
So a confident buy is when this trend line is broken, is what I'm trying to say. You know, doesn't mean you can't scalp between here and here, but it's risky. And you could just measure your gains. Like now, look, you're talking 4 or 5 pips with a spread 3 pips. It's just not worth it. You know, we want to be these streams of the bands as we come out at the bottom of the fib, which we did. They're the better trades to take. Here we go, pushing now. If it breaks this, we might be able to buy above here. 20 seconds left. This is rejecting off that trend line again. There you go, there's the rejection. Is it going to break it?
That was really a tectonic shift for this White House.
The theory of this bill, as I understand it, is there'll be a multiplier effect. How did Democrats mobilize
Down it goes.
specifically younger voters?
Bringing you the political news you need to know.
The president has made it very clear.
So that's quite a solid resistance.
For the intersection of Wall Street and Washington.
Well, you don't want to be caught in a gap between those two. You know, you're waiting either for a break below, and then when we get to outside bands, buying again, or it breaks above, quick scalp for the buy, and then we'll wait for the sell back down again. You know, they're your options. Just sit on your hands and wait for the setup. Countdown, 30 minutes to go. That was that big move. Always say to the team, whenever it gets to 30 minutes before the open, there's always a move on something, and that candle shooting up was right on that. It's weird. It's like 30 minutes to go, people just decide to do a bit of a trade. A pre-market boost. That's what that was.
Live from New York, we begin with the big issue, counting down to Chair Powell.
Chairman Powell.
Jay Powell.
Looking to hear from Chair Powell.
For right now, the Fed is kind of driving the ship.
The reality is Powell is extremely hawkish. We have the all-important Fed meeting. Powell.
Remember, that is tomorrow. Interest rate decision, 7 PM UK time. We'll be trading gold with that one and going for some mega true scalping. No stop loss, no TP, just get in there, get green and get out. But it's a great opportunity to catch some moves. And we'll be trading again. We've just got the existing home news tomorrow, so we might just do a live stream for the interest rate decision, just for 30 minutes or so, and just you know, mix it up a little bit, because it's another home sale one.
Michael, to the both of you, thanks for being with us, and let's start with this bond market. A 10-year at 3.55, a 2-year approaching 4%. Can I get your view on this, Victoria? How much of a buy is that?
Well, look, I mean, as you're speaking to someone that actually manages some taxable fixed income, I think you have an opportunity here. We look, and you've been talking all morning about the percentage of S&P stocks that are, their dividend yield is compared to the 2-year Treasury. I think there's only 16% that are above that. So I think you do have a buying opportunity. We're actually buying in the fixed income markets, but now we're buying longer duration. We've been short duration for years, and so we've been lengthening that duration, going out the yield curve, but really kind of doing a barbell approach, Jonathan. We like the yield you're getting on the 2-year, but we want to go further out the curve and extend that duration, so doing a barbell there. I think you do have a little bit of an opportunity. The TINA component is not completely in play at this point because there are other opportunities, and I think you can also leave a little bit more in cash than you have previously, because we are going to have some volatility in the equity markets, and that gives you a little bit of fodder when the market comes back down.
Bob Michael, do you like a 10-year at 3.55, 3.56?
Not in the least.
if I look what the Fed's done so far, let's remember they've raised rates 225 basis points. We think they have more than that to go. They have at least another 250 basis points to go. So we're less than halfway through. The market's even pricing in another 225 basis points, so saying they're halfway there. I don't recall in what textbook it says it makes sense to fight the Fed.
What is fighting the Fed in credit then, right now, Bob? What about credit? Where does that leave things?
Well, credit, I have to say, is a point of a lot of debate internally. Our high yield team, bless their souls, looks at the high yield market yielding over 8.5%. They look at default rates hovering close to zero. They see default rates, in a recession going up to 3 or 4%, and feel that at a 500 basis point spread, you're compensated for that. And we're saying
US-30
until we get into a recession. A reasonable spread level for recession is 750 basis points. We think at a minimum, the Treasury curve will be at about 4.5%.
CMY open.
A 12% yield with credit spread and where the Treasury curve is. That's
Set up on the 1 and the 5, and again we'll see what we get on the open. See if we get a nice. I wonder if we're going to get a nice push up. Type 236, just like same on NAS, and a break above our centre line. We might do.
I think to an extent,
or we're just going to tank again.
Be patient, but I would say instead you need to be choosy in what you're doing. We're not investing in high yield. We don't think you should be taking that risk at this time, because we do think if you're going to have earnings expectations pulled down, whether you go into a recession this year or next year, do you want to be in that high yield credit space? We look at investment grade credit, and I think you've got some better opportunities in those BBB names where spreads are out, you know, a little bit on the year, but not significantly. You're still not at the high spreads that
nice
you've
push
seen
down on
in
NAS,
other,
rejection again.
Or other times like this. And so I think you have some opportunities there where you can build in, because the credit market is telling you, yes,
So we can
yields
adjust
are
that
high,
now,
but I disagree. I don't
as that
think
was a
we're going
false
to go
break, as you can
double
see.
where we are right now. I think we're going to go maybe a little bit higher. Then when we hit slower growth, hit possible recessions, we're going to see yields come back down, and that's where you get the advantage of the yield curve along with a 4% coupon.
Just getting some breaking news as well, some headlines crossing the Bloomberg. Let's get to Abigail Doolittle on those lines. Hey, Abby.
Hey, John. Well, we do have breaking news, and we have breaking news on two major companies, starting off with JP Morgan. Jamie Dimon, the CEO of JP Morgan, in prepared comments, he has criticized higher capital requirements ahead of hearings, of course. He and some of the other CEOs from big banks heading to Washington this week to testify on Capitol Hill in both the House and the Senate. This, of course, as the fall midterm election season heats up and a stack of proposed banking bills await potential action. They, of course, suspended the share buybacks back in July to quickly meet higher capital requirements tied to a harsher stress test result, and previously flagged increase to its buffer to systemic importance. So again, Jamie Dimon
Back again, let's see if we can buy the dip on this again.
Capital requirements ahead of earnings, ahead of ththose hearings. As for Microsoft, that's the other piece of breaking news that we have right now. They have raised their quarterly dividend 10% to 68 cents per share. The stock not really doing all that much, and I should say in JP Morgan, that stock not reacting to those headlines all that much. But given the fact that, John, as you know, that they did pre-announce, I think a couple of weeks ago, maybe it was a month and a half ago, on Forex, this is probably a positive for investors, the fact that Microsoft is raising its dividend by 9.7% to 68 cents a share. Right now, that stock down about 0.5%.
Abby, thank you. About 24 minutes away from the opening bell, equity futures are lower by 6 or 0.7%. This market looked for another outsized rate hike from this Federal Reserve. Mike McKee joining us now for more. Hey, Mike.
Hey, John. Well, it's kind of interesting because the rate hike is probably going to be the least important aspect of the meeting, since it's pretty much priced in already. What really is going to get people's attention is the summary of economic projections, what the Fed thinks is going to happen to the economy.
So look at cable, and again, just breaking away for our NY line again. Nice if it gets down to our outside of our bands for a pullback buy to our NY line later on, but we're waiting until here. We've got plenty of time
look for that
to load up on that one. NAS, we'll wait to see if we're going to get a retest of our trend line here, and US-30 we're set up for the open, see if we're going to get a push up on the open after what's pretty much been a sell-off all the way from London Open, which was here. Look,
the dot plot, what do they think they're going to do about rates? The high white line there is what
just trying to pull there. Let's see, I'm watching NAS as well. Just broke below our center, but we're in a, we can see we're in a demand zone there. We've still got a buy signal. RSI still hanging around the neutral zone.
For longer, and so then we get to Jay Powell's news conference where he's expected to repeat that remark by saying that they are purposefully moving their rates to a level that will be restrictive, sufficiently restrictive, and that will require maintaining a restrictive policy.
I was trying to push up, which is good.
Some time. Powell expected to be on message and trying not to give anybody a reason to think that the Fed might pivot anytime soon. Now, as Bob Michael points out, the markets have priced in the Fed going as high as 4.5%, maybe a little bit higher at the moment, but they still think there will be a pivot in the latter half of 2023.
Mike McKee, thank you. Bob Michael loves to give you a question to ask in the news conference, so let's ask him that now. Bob, what would you like Mike to ask in this presser tomorrow?
I think he should push the chair on the balance sheet runoff on quantitative tightening. Every meeting, there's some debate about how high they're going to hike rates, and even the market's pricing in a doubling from here, which is dramatic change from the start of the year. Why are we stopped at $95 billion a month in balance sheet runoff? Why don't they put that live every meeting and perhaps ramp that up to $120 billion per month, which is the inverse of what they were expanding a couple of years ago. So I think there needs to be some questioning about their policy on balance sheet runoff.
Mike, your thoughts on that? Just to get your reaction to it, Mike. Why haven't we heard much on it?
Well, they're trying to make it something that runs in the background and doesn't influence monetary policy all that much. And what's interesting is that a lot of people in the markets are suggesting the Fed might be going too far too fast with balance sheet reduction, that there's a liquidity problem ginning up in the markets, and that they may have to stop sooner. So it would be interesting to see what he would say to your question, Bob, because it's kind of the opposite of the question he might be expecting.
Bob Michael and Victoria Fernandez are going to stick with us. Mike McKee, thank you, buddy, as always. Futures lower on the S&P 500 with your movers. Here's Abby.
Hey, John. Well, let's reiterate that breaking news that we had relative to both JP Morgan and Microsoft. We have JP Morgan at this point down, just modestly down a little bit more than 0.5%. This, of course,
now starting to push back down again. Rejection.
Jamie Dimon, CEO of JP
Just waiting to see if we can get a break and a retest of our trend, and then we're going higher. Still green on the trend, still green buy signal. So
to testify before both the House and the Senate. Back in July, they temporarily suspended their buybacks to quickly meet stricter capital requirements. Microsoft down 0.6% despite raising their quarterly dividend by nearly 10%. That stock right now down about 0.6%, and they did raise it to about 68 cents per share. Ford is down sharply, down 5% on disappointing earnings. And then Norwegian Cruise Line up about 3.3%. This is, of course, on an upgrade, a more positive view there. So we have a little bit of the reopening flare helping out some of those cruise line operators, John, and the travel trade.
Abby, thank you. Coming up on this program, corporate America, feeling the inflation pinch.
The risks are certainly on the downside in terms of
set on our, you can see here, look, on our demand zone.
Margin story, I think, that has yet to weaken in any meaningful way.
It's about planet Earth. What's on the next page?
Can't we live in a way that doesn't overburden the environment?
No positions open at the moment, so we're just waiting 15-16 minutes to the open. So we might well go in on NAS. US-30 looks good, just ranging a little bit in and out on the trend. Still trying to push back up. Again, it's the same as NAS, a sell-off since this morning. Now let's push up. US-30 trying. I'm not entering on US-30 yet. If I'm going to enter a trade, it'll be on NAS, a smaller amount. If it pushes back over this moving average, let's have a look. Nice push up.
Is there still room for Abenomics to be carried out in full in the way that Shinzo Abe imagined it?
The economic situation that Prime Minister Kishida
Going to break that center line. Come on.
Different from the one that Abe Shinzo was faced with when he became Prime Minister 10 years ago.
Does Japan need a new policy? Is that what Kishida has to learn, or are there parts of this that he should hold on to?
I think there are probably parts that he should hold on to. I think the main challenge which Japan faces is demography. The population is declining, rapidly aging. Women are totally underused in the labor force, especially educated women. One needs to think about increasing immigration. These are issues that Abe tried to address, but a lot more needs
Just ranging around.
To quote-unquote revitalize Japan.
Got about 15 minutes to go to the open. Like I say, there's no more news today apart from the crude oil tonight, which we trade.
The Open with Jonathan Farrell. Drilling down on the numbers and preparing you as only Bloomberg can. Weekdays on Bloomberg.
NAS pushing down again. Like I say, struggling to break that trend line and push back up to 236. I want to get back to that golden zone. This is what I'm trying to, you know, just that everything's so bearish at the moment. I'm looking at an area of TP around this zone here. That's what ideally we're looking for. So a small correction, but enough to scalp. And that's up here, look, as you can see. On the 1 minute, but no chance yet unless we get a break. We're just going lower and lower. Probably retesting our outer band.
We still have reasonably solid revenues because nominal GDP is actually quite strong. It's really the margin story, I think, that has yet to weaken in any meaningful way. I think that will bring earnings down.
Another warning from corporate America. This time it's Ford, bringing down its earnings estimates and writing in a statement the following. Inflation-related supplier costs during the third quarter will run about $1 billion higher than originally expected. A shortage of key components can disrupt Ford's production of vehicles. Kelly Lyons has more. Hey, Kelly.
Hey, John. Yeah, a big warning from Ford. They say that larger than expected $1 billion input on the cost side means that their adjusted EBIT's only going to be about $1.4 to $1.7 billion. That is less than half what it was a year ago and about half of the quarter reported last go around. And that is why we see the stock down about 5% in early hours. But we know, as you said, that Ford is not alone in issuing warnings of this kind recently. A number of big household names have done the same. FedEx, for example, issuing a profit warning late last week, citing a decline in global volumes due to the worsening macroeconomic trends. You had GE warning supply chain challenges will have a negative impact on profits. A similar story when it comes to the steel makers. That list goes on. The common theme is one kind of just stagflation, where growth is slowing, weighing on demand, and inflation is high.
So this is kind of the bigger TP, which I'm hoping we're going to get a retest on. Let's say price hit it, rejected, back down again.
For U.S. companies negative now for 15 weeks straight, meaning the downgrades are outnumbering the upgrades. But as you and I were talking about yesterday, as we were just hearing from Peter Oppenheimer at Goldman Sachs, that what we've heard from the likes of Mike Wilson at Morgan Stanley is that these still are too high, those earnings expectations. They expect more downward revisions to come, and they think the equity market will go down along with that.
That's our line for the open.
Victoria, first to you. The concerns around earnings, do you share them?
I do share them, and you know, Jonathan, we talk frequently about kind of what our expectations are, and we actually thought we were going to see those downgrades come in the second quarter, and we didn't. So we pushed that back and said, okay, that's going to have to hit in the third quarter. As Kaylee showed, we've seen those continually come down, those expectations, but I think we also have to remember, you know, yes, there's
got a sell signal flashing in, as you can see, as well, so that could be good. So I'm not looking to take a sell in here because we're getting towards the our outer bands, and the trend bar's still green. It's going to range around. Here's a sell signal. RSI's broke back out.
for consumers, for workers. So yes, I think we're seeing a slowdown. Yes,
Just going to wait now for the open, so this next 10 minutes plays out.
We're going to fall off a cliff when it comes to earnings. And when you look at some of the notices that came out, Ford you mentioned, FedEx you mentioned, but at the same time, look at other companies. UPS came out.
Buy signal never really happened. I mean, it tried to, but just couldn't break. But we managed to scalp that. That little move. It was again based on the news, went along with US-30. And now we're just looking for buys again out of our demand zone here. Unless price breaks below it, then we're going lower. And we're going back down to, as you can see here.
We've got mortgage rates, Bob, through 6%, maybe approaching 7%, but a massive repricing of real rates. How long before this shows up in the economic data, Bob, economic activity?
Well, I think that's what the Fed is looking for. They do see that they're raising the cost of funding, so it's impacting auto sales, housing, and credit card purchases. But it's coming down from a very high level.
Nice break outside the zone now.
Margins are still pretty good. And they put in place 2 years of ultra low cost financing in 2020 and 2021. And you've got a tight labor market. So they've got to pass along that cost. I think the Fed's watching all of this, and I think it's going to cause them to have to go further than even we think in hiking rates to really lean in to this kind of growth.
Is that a 5 handle on Fed funds, Bob?
Well, for now we're at 4 3/4 is a minimum. So yeah, 5's definitely in the realm of possibility. And one of the things that we've looked at is the Fed has never stopped a hiking cycle with both headline and core inflation above the Fed funds rate. So they've always gotten to a positive real rate.
So Bob, with that in mind, you've got the potential for 5% Fed funds. You've got a base case of a recession. Can you talk to me about the character of that recession? I get a lot of guests on this program, Bob, you've heard them, who talk up short and shallow. If we get one, it will be short, it will be shallow. Do you share that?
No, I don't. I think that you have to step back and say the Fed is fighting a 40-year inflation problem, and they and the other central banks are horribly offside. So they're going to be very aggressive in here. On top of that, we've had 2 years of ultra excessive liquidity at a very low funding rate. So when you have tremendous liquidity, which is
7 8 minutes to go. Good luck, everybody. Make sure you're logged in on the right thing on your broker if you're scalping this as well.
Something will go pop in the night.
Are we going to get a pop-up, or we're going to break lower? There's a level of support, as you can see here,
something's been financed with too much liquidity,
which you can pop on the chart. There's a support indicator built into our Axe trading system as well, for those who don't know how to draw them, so you can have that done automatically for you.
This much liquidity out of the global system.
That's kind of where it bounced, price bounced,
everywhere and inflated the price of everything,
which is just below our demand zone, as you can see here.
I'll tell you, at our investment quarterly,
so this is the area I'm looking at. If we can get some kind of pullback to it.
Who just see a lot of downside, and there's the more, let's call it modern school of thought. Those have been around since the financial crisis that believe MMT will cushion to the downside. We'll wait and see what the central banks think of that.
So Bob, where do you think the risk is? Just as you look right now, where's the leverage? Because I'm told it's not on corporations or consumer household balance sheets. Is it on the sovereign? Where is it?
No. A lot of stuff got financed in credit. There's a lot of discussion about what's going on in the loan market and a slower credit quality than previously. I think the private capital markets are very opaque. It's there somewhere. It may be in the public markets, but a 2.25% Fed funds rate and looking at the 10-year at 3.6% or wherever it is not leaning into any of that yet, which is why we're so pessimistic about where the Fed funds rate is going.
So Bob, you get a lot of people who come to you and say, I need to put some money to work to find some income. Are you just pushing them to hold cash-like securities? Is that where you're pushing towards?
You know what, John? In the front end,
momentum is now above that 30. It's great. So let's see. We're going to get some kind of push up.
Space. We're looking in the investment grade credit space, and yeah, there are even some short-dated high yield cash flows that look bulletproof to us. So we want to lend money to borrowers who have fortress balance sheets and just hide out there, collect somewhere between a 4.5% to 5% yield, and let this wave of inflation and central bank tightening wash over the market, and then see where prices are.
Victoria, I'm not sure if you've run away since Bob started talking, because it all sounds very, very bearish. Can I give you the final word on this?
Well, I'll try to bring a little bit of optimism here, but when we're talking to our clients, I mean, we do think there's areas that they can invest in right now. Obviously, we've talked about fixed income a little bit already this morning. Having that cash flow, that steady cash flow, knowing you have a stated maturity date to get your par value back, we think that's an option, and you can combine that with your equities. Look, we're looking at quality names, quality balance sheets, quality management companies, quality earnings. Combine that with some of the dividend components you have, and even that the total cash return, right? Dividends and buybacks, then you can put yourself in a position where even with volatility in the market, even with all the things that we've talked about so far that are headwinds for the market, you still have a little bit of a tailwind to help buffer the volatility that you're going to see. So I think you can do that with your clients, and you'll be well positioned regardless of what the Fed and all the other central banks this week, because we know we're not on an island, right? We saw Sweden Central Bank 100 basis points, a lot more this week. You can be well prepared.
Victoria Fernandez, Bob Michael, to the both of you, thank you. Yields up, stateside, yields higher on bonds, yields much higher on gilts in the UK. The up and about just around the corner.
It's about planet Earth. What's on the next stage?
Can't we live in a way that doesn't
Get ready, everybody. 5 minutes to go. Good luck. Final trades of the day. I'm going to say there's no news after this. We'll just do some scalping, 10-15 minute scalping of this open, and that's our day done. And like I say, we're 22% up on the day, so let's just see if we can finish it off. We've got a red on the trend on the bigger time, but again, the indicators have no impairing on the open, because we know we're going to wick either way. The only thing I'm looking for is technically we're looking for buys. You can see that we're getting a rejection at the bottom of our zones, bottom of the Fibonacci, this support zone here that we're highlighted, you know, but again, it doesn't mean it isn't going to drop on the open then push back up. So that's what you're going to be prepared for. But if you was, you know, going to say, I'll say go, I'm looking for the buys. There's more room to the upside as far as I'm concerned, but I'll pull back into this golden zone on the fib.
Vietnamese consumers are very aspirational. You've got millions of people riding motorbikes, and they want to be riding inside cars. Vingroup, Vietnam's biggest conglomerate, has really tapped into that. The founder and chairman aspires to be the Elon Musk of Vietnam.
Vung is Vietnam's richest man with outsized ambitions. He wants to sell cars not only to the Vietnamese, but also Americans and other consumers around the world.
If VinFast is successful, that goes very well with the ambition of the Communist Party of Vietnam. But if they fail, it will be very, very hard blow to Vingroup and also to the national economy.
Innovation, money, and power collide in Silicon Valley and beyond. Bloomberg Technology with Emily Chang. Weekdays at 5 p.m. in New York and 2 p.m. in San Francisco.
Beautiful drop now. Look at that NAS dropping through the floor just before the open. So this could be a nice market manipulation, scaring people. We're outside the zone. We've got some good volume to the upside. So
Upgrading Norwegian Cruise Lines to a buy, highlighting the company's strengthening booking trends. Barclays downgrading Nike to equal weight, warning that currency headwinds and China weakness could weigh on next week's earnings. And finally, Susquehanna downgrading PayPal to neutral, expecting margins to remain under pressure amid growing macro headwinds.
get ready, everybody.
Coming up, recession or no recession, Alpine Sarah Hunt making the case for buying US energy stocks. Their conversation up next. Equities down 0.8 to 1%.
Final trades of the day. We got it. It's going to reject out the zone, is going to break it, and if you look on the 5 we can go lower, as you can see. Got another zone down here, we can stick a line on that there, look, whoosh. And we're going to get a retest of our trend line. Good luck everybody, sell signal is stuck, so we're in a sell mode. I'm just looking for a continuation, a break below. Let's go to this line now. Let's get rid of this as well. Here we go. Beautiful push up, beautiful.
Okay, so you're moving in on me quick. Distracting me.
Nice $30-40 on that. Let's see if it's going to go again. That big wick can be filled.
He's a troublemaker. Yeah. What did you get up to this weekend?
Got 5 trades. Let's see if we're going to get any more. Beautiful push up, just as I said it would. Catching people who are just looking to sell straight on the open, triggering people's stop losses, pending orders. Let's watch this move. This is good. I love this volatility.
I will concede. I can see.
Let's see if it fills that wick.
Very good game. Well played. Thank you, sir.
Pushing up nicely, again rejected, pushing back down. Look at that, beautiful push up. Filled that wick you see with the second candle.
Can't we live in a way that doesn't overburden the environment?
We need a better story. Yokogawa can rewrite it.
Nice push down and rejection. Look at that, beautiful.
25 seconds away from the opening bell in New York. Good morning to you.
Go on, push up. Go on, get over that centre line.
We're down -0.8% on the S&P. On the Nasdaq, we're down 0.9% on the Russell, down almost 1 full percentage point. Having a little look at session lows, and at the epicenter of this, it's in the bond market. Let's the opening bell, switch at the board, and get to your bond market right now. Yields up 9 basis points. We're now looking at 360.
Going to retest.
358.27. Yields higher by 9 basis points in the US. Over in Germany, yields much higher by 14 basis points. Call it 13 right now on a German 10-year bund, with the gilt market a 10-year up 17 basis points. This is global. The bond market getting shaken out. Yields absolutely flying. Euro dollar -0.6%, 99.63. Got some dollar strength in the mix, and crude is lower by about $1 to $84.
Go on, test that. Push up, push that trend line.
John, well, we are looking at a bearish start, as you were just showing, and all 11 S&P 500 sectors at this point are lower. One of the worst technology really being weighed on by Microsoft. This despite the fact that the company just raised its quarterly dividend by almost 10% to 68 cents per share. But as you were just mentioning, yields, that is the story. That 10-year yield rising in an incredible way.
Beautiful.
The 2-year yield up for a 9th day in a row, the longest up streak since May of 2018, at its highest level since October of 2007. So
Just post those. Some nice buys there on the tech.
Especially high growth tech. Ford down 5.5%, pre-announcing to the downside the third quarter EBIT on rising costs. They did maintain the full year view, but investors not liking another pre-announcement. Royal Caribbean up 1.1% in sympathy with that upgrade at Truist.
It's going to push up.
For Norwegian Cruise Line on the better industry bookings. And then finally, John, Wynn Resorts up about 3%. This is Hong Kong signals it wants to end some of the COVID restrictions. China is perhaps going to agree to this, according to some reports. So we have these Macau casino operators higher. Wynn receives about 40% of its revenue from Macau.
Abby, thank you. About a minute and 40 seconds into this, with negative 0.9% on the S&P. Energy down 0.5%. Materials down 1.4%. Every industry group on my screen right now.
Beautiful buy now. Look at that nice signal confirmation.
Going through the bond market worldwide. Treasuries, your 10-year up 9 basis points, closing in on 360. The 2-year up 4, closing in on 4% at 397. Over to the gilt market in the UK. The 10-year yield up 16 or 17 basis points. The 2-year up by 18 or 19. Going into the Bank of England rate decision later this week. The 10-year in Germany in the bond market yields up 13 basis points on a 10-year maturity. The front end on 2s up 12. Do you want a snapshot of where Japan last traded on a 10-year? 25 basis points. That's where the cap is. Yield curve control. The BOJ later this week. For how much longer can they keep things there, given what's happening elsewhere?
Hit that trend line again. Beautiful.
Shakeout right now that will stay on top.
We'll wait for another entry.
Equities down by 0.9%. Apple is hiking its prices to combat the strengthening US dollar, writing in a statement the following: as early as October 5th, prices of apps and in-app purchases on the App Store will increase in all territories that use the euro currency, as well as those in 9 other countries. Ed Ludlow has more. Morning, Ed.
Yeah, morning, John. Apple down 0.3%, pairing some of its early decline at the market open, but a drag all the same on the S&P 500 and the NASDAQ 100. It's really important to look at the markets where these price hikes for the App Store and in-app purchases.
RSI going back into that neutral zone again. Ideally want to be green the other side to take more of the buys. So we're just micro scalping at the moment, seeing what we can get from this move up.
Important though, given the yen weakness, what a story that's been in 2022, but also dollar strength broadly against key markets like Europe. If we were worried about this, and we've heard about it before, particularly in the context of the software names, about the impact of currency headwind, then how concerned are we going forward? Because you look across the S&P 500 by sector and the context of sales outside of the United States, this stronger dollar is going to continue being a story for the next 6 months.
Ed, thank you. Apple down about 1/3 of 1% early in the session, 3 or 4 minutes in. Ford, the latest with a warning following FedEx last week. With the latest is Kelly Knight. Hey, Kelly.
Yeah, John, warning on inflation and that ultimately those costs are going to be about $1 billion higher than expected, which is taking shares of Ford down.
See if that green wick's going to get filled.
Dragging down peers as well. The likes of GM, for example, down around 2 percentage points. Tesla a little bit more insulated. It's roughly flat on the day, but now Ford's loss is actually deepening. We're talking about 7%. It expects its adjusted EBIT to be in the range of about $1.4 to $1.7 billion when it reports results.
Yeah, managed to do. Oh, we got one loss, 26 cents. Damn, damn, damn. We just took some more positions. Again, all the buys.
$3 billion plus. So this is pretty light here for Ford in the third quarter.
One loss. Damn. Let's see if it's going to push any higher.
The company also said because of shortages of key parts, its inventory of half-completed vehicles is going to stay elevated at what they guess is around 40 to 45,000 vehicles at the end of the third quarter. It said those largely are high-margin trucks.
Still trying to break above our trend line here, look, as you can see.
That you necessarily would want to see here. As for what that means overall, Ford's inventories of raw materials, it is sitting right around a record of $6 billion, John.
Kelly, thank you. That stock is not doing well at all in the last 24 hours. Kelly Lyons there on the latest. Your equity market, we're down 0.8% on the S&P 500. The battle lines drawn on Wall Street. On the one side, Goldman and Morgan Stanley painting a very gloomy picture of shrinking margins and a retest of June lows. On the other hand, Wells Fargo and JP Morgan
so now flashing up.
Looking for near-term upside and resilient earnings. For more, it's Taylor Riggs. Hey, Taylor.
John, a lot of the technicals come from breaking through 3,900. We closed yesterday's spot.
Pushing down, selling.
Of course, this morning a little bit below that. So that is when you think about an equity market year to date off about 18%.
That was a nice entry from here. Perfect to our trend line.
That is the setup for the S&P 500 as we head into all of the fundamental conversations as well. Let's start with the bullish side. Talked a lot about this. JP Morgan.
Just hold now and wait and see.
Maybe bottoming. There's also been some low investor position. I've heard a lot about still a lot of cash on the sidelines waiting for that.
Bottom of the fib again, pushing back up.
I know, declining inflation views. Peak inflation has been sort of a huge bad call every sort of month this year, but nonetheless, that is sort of that bullish picture that represents the view of JP Morgan.
I put out a JP Morgan quote yesterday, you know, and just said, guess who?
Oh, no.
And everyone knew.
Everyone knew.
Everyone just replied, Marco.
I know. Well, but so let's take the flip side of that, John. This is going to get a little sticky with the math. I'll try to be quick here. You think about sort of Mike Wilson at Morgan Stanley saying the equity risk premium, that's what we're showing here, way too low. With the 10-year yield that approaches 350, a 2-year that approaches 4.
See if we can get a few more trades away. I'm just waiting. 14 seconds to the next candle.
I think the focus has been on the denominator of that earnings yield. That price has to go down to get that equity risk premium back up to fair value.
Super smart. Taylor, as always, looking forward to the close a little bit later. Thank you. Sarah Hunt of Alpine Woods laying out her calls into year end right in the
Beautiful push up.
We have not given up on some of the larger tech names like Microsoft or Google. We continue to like energy and the US. A recession will hurt the energy call, but it will not be as negatively affected as the rest of the world. Sarah, I'm pleased to say, joined us right now. Sarah, let's start with that tech call. We just had Bob Michael at JP Morgan join us about 20 minutes ago, saying that in a minimum this Fed gets to 475 and it may well have a 5 handle or higher. What does that mean for those tech calls?
Well, I think the biggest problem for technology is both the companies that don't have a lot of earnings, but also I think that we still think of technology in a basket that doesn't include staples. And I think that the argument that we've been making is that there are a lot of technology names that are really more like.
See if we can add some buys at the bottom of this again.
We tend to see those stocks performing not so badly into slower economic news because people have to have their phones and they have to have their computers. So it's not quite the same as some of the more
nothing at the moment, still waiting. Let this drop.
As opposed to something that people need.
Can we approach the valuation concern though, with a 2-year yield closing in on 4%? Yields up again today, and it's not just a local domestic US story.
382 zone, as you can see, looks moved down as it does.
Big shifts in the German bond market.
That's still the area we're looking for a retest back to the top of our bands.
Or do they need to go back down?
I think they need to stop going up, and I think the problem right now is that people don't know where that is yet. And
here's our major support, as you can see. So again, the open was just a little push up and then a rejection back down, going the way of the market. RSI still rangy. We want to see our volume above 30. Push back now. If we get above that 11832, we're going to look to buy again.
Because there's been so much volatility, but I definitely think that you want to see things stop going up before that valuation becomes something that you can deal with better. I don't think that they have to come down.
I'm looking at a risk-free 4% in the bond market in treasuries. Sarah, what do the energy names offer me in comparison? What's the competition like now?
I think on the energy names, I'm not looking at it necessarily as a competition on the dividend yield, as I am looking at what's going on in the world.
So look at the cable trade. How's that shaping up for us? And cable's going to be looking good for a buy as well. Yeah, nice. As you can see there, we're well outside the zone. It's looking good for a buy very soon, actually. We're 28 pips on cable. I'm just going to post that into the group.
Away from fossil fuels that is not going to be as fast as people think it is. So I think you've got some possibilities in those arenas, and I think that's one of the reasons that we like energy.
I was looking at some of the investment numbers. Just the capex, $700 billion in 2014, $300 billion in 2021. That was oil and gas investments, and how they've declined. Amin Nasser of Saudi Aramco said the conflict in Ukraine has certainly intensified the effects of the energy crisis, but it's not the root cause. Sadly, even if the
28 pips back to that line, so that should be a good one.
Sarah, is that what you're thinking about, these long-term dynamics beyond maybe...
Let's wait and see. We've got some good momentum.
Absolutely, because if you look at what's gone on with energy in the last decade,
I can put the fib on here.
The idea that we were going to get rid of fossil fuels, and they
You can see again we're bottom of a fib.
want to invest in them. I think the problem is that transition
RSI looking to push up, even if we just get to that center line of our bands on the 1 minute. That's 10 pips, that would be our TP.
And that lack of investment is really creating a supply problem. So even when you have
That's going to be our TP.
Demand, the underlying need for the infrastructure that basically powers the entire world is still there.
Last time we spoke, you liked Devon, you liked Chevron. Are they still the 2 top picks?
We still like those on the E&P space. We also like things in the
So cable looking good. I could just take the fib off now, don't need that.
LNG industry, I think LNG LNG is going to continue to be important.
We've still got 15 minutes to go before we take that trade.
We still have to look at this whole base and say we are going to need a lot of these products for a longer period of time.
Sarah Hunt of Alpine. Sarah, always phenomenal. Thank you. Some big calls there on the energy front, on the tech front too. As those tech valuations
US-30, how did that play out? Exactly the same. Again, just dropped off the face of the planet over the edge of the cliff, as you can see. From there,
397, 398. That's America. Look at the gilt market. We're up by 19 basis points on a 2-year gilt yield to 328 on a 10-year, up by about 17 in the bond.
so again, NY Open was a bit easier to figure out. It was just a pure drop. There was no buys on that at all. So now it's going to start to pull back, and again we want to wait for it to be inside our zone here for a buy. We've got good momentum to the upside. RSI is well oversold, so that's another good reason. So US-30 is looking good for a buy soon. And again, if I'm going for a buy and you want to be very optimistic, you want to be TPing about there.
The higher capital markets particularly are bad for America. Remember, he has been beating this drum for a very long time. They had faced those harder stress tests, are going to be facing higher
So yeah, watch.
as well as previously expected higher GSIB buffers. But, you know, there's a different thing on the set of lawmakers' minds separately. That is higher mortgages that their communities are facing. That is higher rents. That is higher cost of housing in many areas. And remember, we have seen this before from lawmakers on Capitol Hill with Diamond and his peers that worry about pay for their communities, the bankers that work in those community banks, at a time when you're seeing many other banks, not necessarily JP Morgan, but many other banks step back in terms of hiring and workforce. We saw JP Morgan most recently announce that they would also be cutting some of their workforce when it comes to their home lending business. But there are a lot of concerns on the minds of lawmakers today as these bank CEOs meet.
Now it's rejecting, pushing back.
Investment banks, but there are the big
Let's see if we can get anything on this move.
Shanali, where have you been? It's been too long. Catch up.
Little vacation, John. I'm back in time to hit the hill.
In a range, we've had a sell, buy, sell. Got a zone here, nice support level. Not looking for much, just to push back to this. Going against what the news is saying, but we know that's what happens.
I will be able to say it was enough only after Ukraine wins.
That conversation still ahead.
$14 seconds to go on this candle. I told you if it breaks that top of that red, we can be in for more buys. Get out with some green. Perfect. Perfecto. That was brilliant. Another $40 there. Excellent on that little move. Yeah, $40, $45, nearly $50. Was a nice break above. It's going to break our trend line, then we're going higher. It's trying to push up. Momentum's still good.
My grandfather got into the mutual fund business because the average investor could not get a diversified stock portfolio, and it was too dangerous to put, you know, your entire savings in it, just a couple of companies. So the mutual fund was created to give it diversified expert management at a reasonable price. Today,
Pushing up. Let's see what we can get on this. Rejection. It's going to try and break that trend line. Come on. Let's see if we get a buy signal as well.
Money available in the private markets. As a matter of fact, there are half the number of public companies that there were in 2000, and there's 5 times the number of private equity-backed companies. So just from an investable universe, you look at the private markets, and it's you know, significantly bigger. So the question is, that return that used to be captured in the public markets is now
12 seconds to go. 10.
But the problem is, you know, is you're really tied up for a long time.
It's going to finish above our center line. That's a good start.
Trying to figure out a way to solve
Looks like it is, yes.
which is how do you bring those returns responsibly, the democratization of the private markets to the retail investors. And I describe it as a bit of like running with scissors. Scissors is a great tool if you use it appropriately. And so we're focused on trying to figure out responsibly bringing it in to the average investor.
Price trying to break that. You can see it's trying to break on the 5 minute. Pushing its head, smashing its head. Tried it, we had a false breakout above.
For a young person who might like to have a career like yours, what would you recommend?
I think actually sometimes saying, you know what, I was wrong, you were right, is actually a more powerful show of intellectual strength than just sticking firmly by your position.
Those nice 4 candles, nice buys on NAS. It was aggressive because we weren't outside the outer band, but I saw the volume was just right.
Sometimes I'm being asked whether
Now we're back below the 30, probably coming back down again. Price is doing its best to try and retest every time.
it was enough only after Ukraine wins. Until then, we will be asking for more.
The Kremlin moving to annex
Trying again, look.
Ukraine, staging sham votes as soon as this weekend. Russia
Reject. Push again.
saying, quote, annexation would be irreversible and enable Russia to use all possible force and self-defense in the newly acquired territory. Team coverage starts right now with Bloomberg's AMH here in New York, Maria Tadeo in Brussels. Anne-Marie, the latest, please.
Well, what you could see right now is obviously this really undermines what is going on in Russia, and Putin really feeling like he has to give some sort of success. But
We're $300 up for the day. Coming to the end of our stream, so we've done, you know, the news and we've done the open, and I just wanted to get one more final trade on NAS, but it's been a good day. So we started with £698. We're now 900 and nearly 1,000. So like I say, we've had a 30% return on our account from scalping, just DAX, and today NAS has a bit of US-30 for the news. And like I say, it's good to do these small account charges just to show you can do it with the smallest lot size, as long as you're focused. Traded more than I would do normally, but that's because we're live. Like I say, 10% I'd usually be out, shut the laptop, computer's down, that's it, done. And then come back tomorrow.
In Russia's mind, in the Kremlin's mind, legal Russian territory. That means he would say to his people he has legal base case to use.
So I was just hoping NAS was going to break. Keeps rejecting off it.
Conscription soldiers there, not some of these others that they are hiring.
Maria, what's the reaction on the continent?
Well, Jonathan, we're still waiting for official reaction to this, but I can
Pushing again. He's going to get to that center line again.
Of course, repeat the line that this is a fake referendum that the Russian Federation is now doing in retaliation, of course, for the loss and the pushback that they suffered in Kharkiv. This is an act of escalation, also of desperation from the Russian Federation to try to score a win, but also repeat potentially, if this goes ahead, that it will not be recognized. So this will not be recognized as part of the Russian Federation, and the people involved in this will be once again subject to sanctions.
RSI is again rooted around this is the danger thing, because the RSI is around the neutral zone. It's not oversold, not overbought, hasn't done anything yet. Unlike US-30, you see, look, it's well oversold at 13. You don't want to be taking any sells at the moment. We've been waiting just for the buys, and we're going to wait for it to come back into the zone. Like I say, if you'd taken the buy here, then that would have been a losing trade. You'd have been out on that candle there. But you only have to look at what you're against here. You wouldn't take the buy knowing that on the bigger time frame, you're red, 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 red. You know, that's a risky trade. The only thing for it was just the position. If it was perfect, the volume was high, the market's tried and rejected. Now, you know, on the next time it might do it. It tried it here, look. That was a failure as well. So there would have been 2 losing trades on the pullback on this. But you've got to look at the bigger time frame. I mean, this is in the 5 minute. That's what you've got to look at and see. You ideally want the trend bar or the RSI to be around neutral zone. or pulling up out of the oversold zone. You can see it's not. So
civilians, the story on the ground is very different to now potentially going into a full war. And you always have to factor this, Jonathan. When you declare full war, the social impact and the pushback that it could have could be enormous. This is a wild card for Vladimir Putin. There can't be many men.
So it's trying to push back now. So we've got 5-6 minutes to go before we look at entering trades on cable. I'm still looking for that magic 10 pips.
0.23% on the S&P. We're 21 minutes into this mess. The Nasdaq is down by 1 percentage point. Yields are higher on treasuries by 9 basis points to 358. Mentioned it a few times already this hour. It's not just treasuries. It's Germany, it's gilts, it's pretty much everything. In the UK, the 10 years up by 16 basis points to 329. In Germany, we are now higher by 14 basis points to 194. That's the bond market, that's the equity market. Let's dig into that stock market with some sector price action. Here's Abby.
Hey, John. Well, with this bearish action, as you were just mentioning, the S&P 500 down more than 1%, having every
nice push up already.
Being higher, that 2% yield, knocking on the 4% door, up a 9th day in a row, the highest since 2007. All 11 sectors are lower and by about 1% or more. The worst sector, materials, all 28 stocks are down within that sector. This even as the commodity index is basically flat. Real estate also down about 2%. Those dividends looking less attractive as yields push higher. Consumer staples, on the other hand, that's another.
So it's looking good on pound dollar.
The outperforming one, down just 0.8%, and tech, interestingly enough, also outperforming. So it's sort of an interesting shift here. Over the last few weeks, though, John, as yields have simply marched higher, it has really hurt tech the most. You can see that New York FANG index, the mega cap index, that also includes a lot of China tech. It's down about 3% over the last 3 weeks. Banks at one point had been higher. They are now down ever so slightly.
Perfect. I just got in and scalped a little bit of pound dollar there on that move up. I managed to get 10, 20, 30, about $50 already on cable on that move. Look at that, it's just starting to move now because it broke the center line. Let's see, I'm going to wait again. I'll enter again a buy if we get a break above the center line, above our line, this line here, which is the odd Asian line. Let's see. So it was a nice little win on cable, just jumped in there. That was 5 pips. Got a buy signal now. Excellent. Right, let's try and grab some more of this. And this will be our final trades of the day. So I was looking for another 5 to 10 pips, that's all. If I feel like I want to get out of the trade earlier, I will do. I like to hang around and hold.
Administration has committed to doubling the amount of investments in so-called green technologies. I think we need more than just pronouncements. We need real money backing very innovative startups,
so
innovative companies in this space.
Obviously you're going to set your stop loss just below there, and if you're TP you want to be looking about that. That's what we're looking for.
Namely, that growth has been present, but growth has not been, of course, evenly distributed. But frankly speaking, it's hard to redistribute income when you don't have much income to begin with. If the government and private sector can work together and collaborate to drive more innovative growth startups, that can really drive the income growth that the digital government needs to redistribute.
So we'll let that fly, save that to my chart, and like I say, US-30, we're still looking for buyers on US-30. No confirmation yet, so attempted again, another false. Again, it's just dangerous at the moment. I'd probably leave that until we get a buy signal on the 5-minute time frame. I'd leave US-30 alone. NAS still ranging around. Again, it's a buy again if we pull up across here, but he hasn't. Again, I'm going to reset that trend line now, because again they're false breakouts, including the wick, so you don't want to be trading them. There you go. That's the reset trend line. That's what you got to do, adjust all the time, so you know it's got to cross that level for it to try and get back to those outer bands. So we'll leave that running. We'll see how cable gets on, see if we do get a pushback at some point. But yeah, I like our new setup. It's working really well. So we've had a good day with $300, $350, $440 up. So yeah, it's been a good day scalping. Like I say, we started with 698, so we're well over 1,000 for the day. So that's a good return on the account. Hard work, focus, a lot of trades, you know, but that's micro scalping. That's the positions we do. We try and do 4 or 5 positions on every single trade we enter. We leave ourselves enough margin so we can go reverse if we need to. The guys in the group know how we trade it, you know, and that's what I want to teach people. If you want to learn, go to the website, as I said, www.mohawkforex.com. And getting green is what it's all about.
The economic situation that Prime Minister Kishida faces today is very different to the one that Abe Shinzo was faced with when he became Prime Minister 10 years ago.
Does Japan need a new policy? Is that what Kishida has to learn, or are there parts of this that he should hold on to?
I think there are probably parts that he should hold on to. I think the main challenge which Japan faces is demography. The population is declining, rapidly aging.
Like I say, thanks everyone for joining me today, and we're going to be back tomorrow, because you can see tomorrow, if I'm around, I'll try and do the we've got the existing home sales. The main one tomorrow is the interest rate decision. Obviously we'll try and scalp that about 7 PM UK time with gold, so watch out for that as well. You know, it should be a good one. But as always, thanks again everybody for joining me. Thanks to Bloomberg for giving us some background. We're going to watch the cable trade, see if that plays out. Like I say, I just want to wait for a buy signal again to stick on here, and then we'll enter. But this is the position we're trying to get. I'm not saying enter now, we're just waiting for some confirmation on it and see. There you go. So until tomorrow, we'll be back tomorrow. Trade safe, take care, and hope to see you all soon. Have a good one.